Business loans for bad credit with instant approval, no credit requirements, plus funding up to $10,000 in 10 minutes. Done quickly, get in and out of the door, have your funding that you can use as you need to for your business to grow it and expand it. You're in a position to pay off certain expenses. You need more cash flow. You just need to continue overall moving in your operations and much more. Hi, welcome in. This is Michael with Viral Funding Solutions. I'm a business funding expert. You could say a business loan broker expert who's helped out a lot of people of different backgrounds, shapes, and sizes get the right type of funding under the right strategic partnership and roadmap. I've been doing this for quite some time. I've come out with a lot of different content similar to this. I've shown a lot of people the step by step process of going through applications, making sure you do it correctly. And I work with a lot of different services. So I don't just do the revenue based loans slash advances. I also do collateral, credit backed, personal and business, liquidity, equity. I also help people with their cash flow management, profitability in ways of increasing their revenue, mitigating the expenses, understanding the risks associated, where their money is actually tied up, seeking new opportunities, and plenty more. So just so you know this, before we get into this, and I'll be sharing with you a few bits of the details in that document you see right now, I'll be going through and detailing the requirements. Before that, just know I'm a business owner like yourself. I run multiple ones. I started in the digital marketing agency lead generation space a long time ago, many years. I also have one in the health affiliate marketing space, meaning that I've helped out people with supplements and vitamins. I have the ergonomic desk chair right here. I have a seat cushion behind me. I have one underneath me. I have many other products that I've helped out people with. And I started in the back pain space as I had those issues myself. And I helped out people with that. And then I expanded in the health side over years. And then I also have some in the other ventures of the affiliate space, helping out other people understand how to use like email software, CRMs, different landing page software, websites, and quite a bit of things. And people would always ask me that, like, what do you use or how can you help me with this? And then also, I have other ventures, but this has been my primary focus as a business funding expert. And I'm an introvert. I'm more of the analytical type. So if you hear me speak like this isn't to discount it. This is because I am more of a thinker than a speaker. And so I look at a lot of documents day by day. Earlier today, I woke up very early to look at documents. I had to get things done. And so I looked at P&Ls, tax returns, balance sheets. I looked at debt schedules, bank statements, more bank statements today than others. But I was looking at the understanding and average daily bank balances, the starting and ending averages. I've been doing a lot of math earlier today. And so I'm able to understand critically and calculated in terms of what the documents are telling me. And I'm mathematically and system oriented. I went to school, I studied, I played Division I soccer, studied a little bit of sociology, then I migrated or transitioned into chemical engineering as I have a math and system mindset. I did that for some time, and then I had to make a big decision. I wanted to start a business eventually. So I thought, let me get into the business side. So I got deeper into the business side because I had already satisfied some certain requirements there. I've worked in construction, manufacturing, in the actual fields. I worked in financial logistics where I was doing a lot of data stuff, ordering stuff, budgeting, inventory, a lot of things with different departments for a huge contracting company servicing HP and Peace Health. I was underpaid. I couldn't move up a position. The person in front of me I thought would retire never did. I did do a little bit of physical lifting work because we did have to move some media boxes for HP and Peace Health and a few more in the vicinity, other businesses within the same building and a little bit outside of that. And so not that it picked up a lot, but there were times where it did get that way, which is more for stability post-academics and getting back into the swing of things. Company went down under, not my fault, 50 plus people relieved, new transitions, budget costs. And so I had to go back on unemployment benefits and food stamp cards. And I know how hard that is. And it's harder for me too, because even locking eyes with the person at the register to pay with my EBT card. And I was just so grateful and thankful to be out of there with my bags and made it another day. And I didn't want to feel like that person who couldn't go out and have a meal and just pay for things with my family, not even split things 50-50. Even when I could, I didn't want to continue to feel that way. to people. So that's a little bit about myself. And at that time, before the company went down under, just long story short of it, and I've told my story before, I'll try to link it to you down below if I can, or you'll get it in time, is I spoke with a friend of mine through a Snapchat social media app that I don't really use anymore. You're probably familiar with. But he told me about more context in terms of digital marketing, in terms of starting a business online. He had a trucking business at that time. And we got into things. I was just in so much pain that I couldn't move forward. And I just didn't want to take another job / career, go back to school, get more certifications. I already have plenty of that, a lot of life experience at my age already, you could say. And as a Libra, I'm again more of the well-balanced, very loyal type, intellectual, cerebral, analytical person. So hopefully you got that a bit. And so I started those ventures and I built those over many years. I have those running on the back end, but this has been my primary focus. I'm in it with the underwriters and lenders a lot of the time. So now let me go back into this. And the reason why viral funding solutions, you're probably asking, is because I've done this for myself, getting funding in many different ways. And I know the troubles that you go through, even if you haven't yet, to not run into those mistakes. Of course, as a business owner, you will run into them. There's no way of just ignoring them, or usually they don't just not happen, because you learn from them. You should learn from your mistakes, but you shouldn't be having to go through this whole process of all of these people over promising and under delivering, overwhelming you, sleazy salespeople just running around the tactics on you and trying to bait and switch you. And you don't know who to trust in this industry. So I'm unlike they are because of my background, and that I didn't come from a traditional sales background and none of that. And so I believe a lot of people sit with me because of who I am, my loyalty, and that I listen more than I speak, and I ask the right questions. And so all this information, just so you know, I'm going to leave it for you down below in the description. You can get started with this application process and then go through that sequence. And then I'll also leave other content for you. So self-employed, 1099 gig worker, contractor funding, it's for a variety. Best option it could be for you. And the other thing that I want to mention is this may look familiar if you filled out my questionnaire, but yours will be more customized and a little bit differently could be added to. So what I have down below in the description will be a questionnaire form you can click on and then fill out. It's a simple form that lands in my email. Then I can pre-underwrite a file. So as a business loan broker, I'm also a pre-underwriter / underwriter. So I look at a lot of what has been put into that form. That's very standard. It's not an application. If it's a questionnaire you go through at least, and that way I can tell better about what may be possible, what wouldn't be, if this would or wouldn't work, and what you need to have to be better prepared for this down the road, or what else we can work on, if it's credit or if it's collateral, if it's equity, liquidity, if you have a credit partner. Do we need to look at community credit unions if you have a subprime low credit score, or they accept good credit scores, and what bureau or what bureaus are they pulling from? And so it's not always an immediate resolve by just going to a community credit union. It could be a temporary fix. It might be a longer term, especially if you have multiple and you have a relationship with. But there are other ways of doing this, especially in the revenue-based side. So here you can use a personal account for business. If you're using a personal account for business, then this is your only option. If you're running your business through your personal name, that's what you also need to account for. If you are running it through your business, now we have to look at what kind of revenue does your business generate. And keep in mind, with revenue-based loans / advances is what they're called. And advance, this is what it is. And normally what you see in this space, whenever you hear the word bad credit loans or bad credit business loans, what it normally is a cash advance, a merchant cash advance. This is basically where you're getting advanced a lump sum based on your future receivables, based on what your business makes in the future. So we're looking at what you currently make now, and we're predicting what it would look like in the future with your current revenue. And if there is stability there, and if there is a pattern, it helps us see it even better. And that's what we want as the underwriters, as the lenders, as all of us would like to see. And when I look at bank statements and I analyze that, I take my time on it. I don't talk. I just in there, my brain, I'm in there working, and that's who I am as a person. And I believe a lot of people sit with that better because I'm able to handle documents appropriately and understand what you're trying to do, not only now, but in the future, for what uses of funds, or the use of just one, not plural, singular, and really understanding what that does to your cash flow. And if you needed to take a temporary setback to then move forward, everybody has the wrong context when in the belief when it comes to these is you got to make sure that the benefit exceeds your repayment. Otherwise, you wouldn't justify taking it. And you're asking, well, what's the payment? What's the rate? It's less about the rates. It's less about the payment frequency. It's more about what amount of a repayment you get. Trying to get a longer term to begin with would help, but not everybody gets that. But more importantly than that is making sure that the benefit of these funds, what's your ROI? What are your current margins? What would your margins then look like that exceed the repayment? If not, then it's going to always be a clash of friction. And until you get the right revenue, until you get better hold of your business, perhaps there's a part of the business that needs to be better functioning, that needs to be better calculated in terms of generating the revenue, and things you need to drop and things you need to increase. So fairly new, I would say, and there's been some additions. That's why 1099 gig workers are welcome, independent contractors, any small businesses, business owners, Uber, Lyft, grocery shopping, you can think of there for some examples, small businesses and more. And you'll be able to get up to, with the disclaimer there, this is dependent on qualifications. Not everybody will qualify, so just stick in here with me. Get up to $10,000 without needing to have a business checking account used for business. That is right. You can use your personal account for business. No credit requirements normally. We're not basing it on the credit. We're basing it on the revenue and making sure there is some consistency there, or enough deposits and enough revenue into the account. And we can look far back enough to make sure there is a track record that shows us you'll be able to make the payment. So when people ask, are there personal guarantees? Are there all of this involved? When it comes to any kind of loans, normally that's the case. And don't let that put you off. You just have to be accountable and responsible. If you're not, that just shows a lack of understanding how to control finances, understanding how to grow the business. And if you're always setting yourself back, there's a problem. There's an issue there. There's a reason why you don't get enough or you don't get any at all. And don't take that the wrong way. This is just me giving you tough love, not being aggressive or negative. So many people take this the wrong way and go, "Wow, I wanted a lot. I want 100,000. If I wanted 100,000, I'm doing 3,000." That just doesn't make any sense to that. And so there it is. And or business too. If you have one with lower revenue and it's equal to 3K plus per month is what we're looking at, a minimum in monthly revenue. Now, I do want to say this very quickly. Like I said before, there are a couple of other ways to get funding. It is credit, collateral. You could base that off of liquidity with credit and collateral, and also equity. And there's a few other things we can do, like a cash out refinance. If you have to pledge collateral and you want to take money out of that, and then we can look at issuing you that money for whatever it is you need. You have certain debt obligations. You need to pay a lot of things down. You need to reconstruct your debt. You need to reverse debt consolidate, which would be the last option. Before that, I will do the debt restructuring. I'm doing that with plenty of people. I've done it before in the past. I will continue to do it in the future. And so many people need to lower their payments and they can't do another option. They're over leveraged, or that they have commercial property or investment real estate that you own, or somebody you know that they own that, or that they have that property, and we could do an equity injection to completely make the payments or pay off the payments or lower it with a combination of other products perhaps. Or you need to use this for another income revenue generating stream. Those are a lot of the things that I look at, and I've been doing this for my businesses, the marketing, the advertising. Think of me again like the back end partner. And I didn't say that earlier, but like the back end partner helping out the person on the front end a lot, understand how to leverage all of these things. So hopefully that is helpful. More details. Same day funding up to $10,000. And obviously there is more. So if you have bad credit, you're not limited only to $10,000. And when you get beyond, let's say, the 3 to 14 or 3 to 15,000 in monthly revenue range, and we look at the lowest month and we look at the average. So if the lowest month, let's say it's above $15,000 or $15,000 and above in cases, then we're going to ask for credit requirements for those. But it's nothing wrong if you can get more from that, because normally approvals are between 75 to 200, if not 1 to 200%, just depending on the business. Is it your first time getting funding? Certain businesses like trucking go 50 to 75% their first time in monthly approvals. So understand that you can potentially, with the disclaimer there, of course, you have to still qualify, can get more than 10,000 even with bad credit. 450 and above credit, 500 at certain levels, 550 and above, depends on the lender as well. And I have those best connections with those lenders. And if you want to be looked at by the best lenders, then down below is the best place to begin. I do a lot of the heavy lifting on the back end myself and or with my team. And so we'll go find the best lender for you and really understand what is best, or we do it in a more direct way that I have those partnerships. But in this market, it's better to go the indirect, more brokerage looked at a in-house setting. And so for better early payment discounts, higher approvals, and things that we're able to do on the back end to help you out. So that's the best way to go. And again, the link will be down below for this. So approval amount, rule of thumb, it is 25 to 75% of your monthly revenue are the approvals. And we also look, like I said earlier, at the lowest monthly revenue. Example, you do 14,000 in monthly revenue, then the advance to that is 10,000. Pretty simple math, nothing calculus, nothing chemical engineering math or business math entirely, not stuff that I had learned back then and had applied. So this is very simple way to track that. So 14,000 in monthly revenue. If at most, let's say you look at 10,000 more or less, of course it can be lower depending on the situation. We do more lower than higher because you're already a high risk. If you're within the 3 to 14,000 or 3 to even 15,000, even 3 to 20 or 25,000, you're associated at much higher risk. And if you already have bad credit, that even ups the file and that even ups the rates, that lowers the terms. So you, of course, want to have better credit. And if you need help with improving your credit, down below, I'll have credit repair information. And I'll actually have things on the business credit side. So in case you were inquiring about how do I get revolving credit, trade credit, I do plenty of that myself for my businesses. And I've done that for plenty of others that I'm going through currently and that I have gone through already. So I'll link more content down below. And again, the questionnaire is the best place to begin because I'm normally going to give you a highly personalized and customized response on your best funding option and options, thoroughly broken down like nobody else's business. This stuff you can't find publicly. A lot of the information and details I'm going to share with you, it's worth the energy and time reading into it because when you look at it, don't feel overwhelmed. I'll guide you where to look, whether you can or can't qualify. Wouldn't you rather know what that is? I would, obviously. I'd say, I'm going to reuse this. I'll bookmark this. Thank you for sharing that with me. Now I know where to look, and now I know why I've been getting declined or why that source isn't the best place to go to. You showed me multiple options for credit, for collateral, for cash flow, and for more, but I know this is the best because I looked at the file and I understand. I've been doing this for many, many years. Yet people sometimes they get put off and are in disbelief because they're so sub-programmed to believing a certain way. And what it all comes down to, and what I've worked on myself, don't take this the wrong way, but it is personal development, character traits. It's not the skill, it's not the experience, it's not necessarily the culture, but it is more of the character traits that I see a lot of people lack. And I'm not saying that as in an aggressive way. Don't take that the wrong way, please. Don't misconstrue my words. I've worked on myself. Personal development as a business owner / entrepreneur is huge. And I hope that that's something you'd be open up to. And I'm not going to be ever here to convince anybody of anything, just to confirm it. If you can see that through me, and if that helps you in some kind of way, realize that that'll go a long ways. And I see it with people. When I'm helping people, it makes a big difference. I have a high standard. And even if you're not there, can you at least come up, or can you at least raise your own standards to accept nothing less, but everything more? And if you're not there yet, how do you move up? So it's all about listening more than you talk. It's all about not just consuming knowledge, but taking action on that. I'm that person. If you were my broker, my real estate agent, you don't have to tell me at all. Not even once. Don't even tell me twice. I'll have the documents over to you before you even ask for it. That's how much trust I have in you, that I'll send you over the documents. Can you please give me a response back as soon as you can? I know you're taking care of this. No rush. I know your process. Boom. And then I get a response back accordingly. Wouldn't you want that instead of, well, give me a call. If you don't do that, then no, that's not the way to handle yourself. So what it comes back to is the trait of the person. It's the health, it's the relationships, it's the attitude, it's the effort, it's the belief, it's the attitude. Like I said, again, it's the aspirations was the word I'm looking for. Excuse me. It's the aspirations. It's my values, my vision, my mission. Does that all align? And there's plenty more. And even if you don't have those yet, that's not wrong. And even if you are arrogant, ignorant, stubborn, egotistical, driven, cocky, doesn't mean I won't work with you, but just please don't cause any issues on another level that doesn't have anything to do with what we're trying to do. And it creates friction. We don't want to do that. We want to mitigate. We want to lower that threshold. We want to completely eliminate it. We don't want to have to go through that. We want to end up at the end of our day where we can go to our spouse, or we can go back to our family and friends, or just take a break to ourselves consciously and subconsciously, feel like we have enough energy and time, and not look back and go, that disgusting business owner, or that, ugh. And so we don't want that. We want to feel like we have enough energy. We want to feel like we can go to the next part of our day in our personal lives, go out to that little concert event, feel good just to sit down around people you don't have to talk to, just you feel so relaxed and good that your day went well. We want that, don't we? And we want a functioning business that's going to start generating enough revenue, more revenue than what it is now, and not complicate ourselves or other people's lives. So we want that for everybody. And we want to make this as most energy and time efficient as possible. Efficiency is everything. So average pricing, it is 1.39x your dollar amount, and it can be as low as 1.29 and as high as 1.69. But we see at least a 1.50 at most when the revenue is better. Here's an example. And before I give you that, the 1.69 to 1.39, that's just an example of a factor or a total payback factor rate. So it's not a traditional business loan. That's not what this is. These don't normally build your business credit or don't normally report to the personal credit because it's an advance. And so that's not a wrong thing. There are other ways of building your business credit, your personal credit. And so this is great. You don't need to exactly have something that's going to build your business credit. Sometimes maybe, but usually they don't. That's not a bad thing. There are other ways of building your business credit with trade credit, revolving credit. And I'll leave more information of that down below, especially if you have good credit. And what do you do if you have bad credit? To getting secured cards. I have all of this stuff. And especially if you fill out the questionnaire, all of that will come into the package. You're going to see it all in one package. And you're going to go, oh my goodness, I have everything that I need here. And now if I don't take action on this, guess who's the one that's, here, let me move this. I just saw that. I need to put an E there on requirements. Guess who's the person who's at fault at that point? Here, okay, example, you get $1,000, you pay back $1,390 on average. Example number 2, you receive $10,000 and you pay back $13,900 on a 1.39 rate. Very simple, right? We just took the number and we multiplied it by the rate. And now there are buy rates, sell rates, as in on our side, you don't have to worry too much about that. That's in if they were to pay it off the first, second, third month, what would it really be at? A 1.29? Would it be a 1.31? And that's what we're kind of looking at as in the cost of funds and how much you're saving. There's a little bit more math stuff on my back end and stuff that I can share with you in time, especially for higher tier services more than these. But repayment discounts are available if you pay back early. Automatic weekly payments only, no monthly options with any funders. So I run into cases where everybody's always asking, well, where's the monthly payments? With bad credit, you think somebody would give you that? Unless you're going through credit cards and you're doing a secured pledge loan, or you're doing something else, that you're borrowing money from friends or something else that's a variant of. But why would somebody trust you with a monthly repayment when you have bad credit? Or if these files are already a high risk for a lot of different industries, revenue sizes and more, how would they be able to do that? And so, one, that the lender assumes 100% of the risk. Normally you see in this industry daily or weekly repayments, but these here up to the 10,000 mark are weekly, excuse me. Usually though, from anywhere low to about 5 million or so in these advances, you could see daily or weekly. There's been some bi-weekly, monthly, but those lenders, very rarely you see them giving that. It's a rare case. It's usually impossible, really doesn't work. And that's just a testament to the industry. And that's not a traditional business loan. And that's what you're going to see. If you wanted an online bank term loan, an SBA express loan, an SBA loan of a higher amount, an equipment loan, or if you wanted creative credit-based financing in terms of a term loan, installment loan, there, similar things there. And then you have the personal lines of credit, the personal and or business credit card combination of even that. Those could be more monthly repayments. But for an online bank term loan, do you even have the 660 above credit? And in this market, 680 normally plus and above is it. They want 700 plus. A lot of the times, 720 and above. And if you don't have that plus the revenue of over $250,000 or at least $250,000 in minimum, the FICO SBSS business liquid credit score of 155 plus normally is what they want. So enough of a cash flowing business and more profitability matters, and a few bits of that, then it's going to be harder to get. And even then, you're going to be requested to supply more documents, the time that it takes. It can be a 2-week process. Do you need your funds quicker? You can't take that amount. It won't work. But can we work our way up to that? See, I have plans for you in the future, not just to stick to one product. And that doesn't mean that if you just stick to one product, it's a bad thing. You can do that. We can look at a combination. So I help you in many more ways with credit, cash flow, collateral, if any there. And if you don't have the credit, but you have a credit partner, and you feel like you can get more than just 10,000 or so, or one of these revenue-based advance / loans, and your depositing frequency maybe is just every week or bi-weekly, and you just don't deposit daily or every week or as much as you thought, then maybe you can leverage a credit partner, or you can repair your own credit. And at that point, we can best determine, or I can go over with you before that, if what's this case, you have to wait a year or 2 years instead. If you had this late payment for this type of product, and many things like utilization, comparable credit, age history, aged accounts. There's a lot of things that I look through, and I can do soft pulls. And I also, like I said, I look at bank statements and plenty of that. So credit partners would be helpful too if you had to go the credit partner route to do credit-based funding with leveraging your personal credit to get business credit cards, personal credit cards, 0% interest business credit cards, by the way, that I'm going to leave more information for you down below. And you can leverage somebody who has better credit. Perhaps you have a business partner, perhaps it's a friend or a family member. What would the situations constitute to? These are 3 to 6 month terms. So that is very helpful because, for one, it's a weekly repayment as opposed to just going daily like some of the others. And sometimes daily is not daily. I would actually prefer, because you have micro payments that are being made that you know for sure are coming out of the account. And if you have enough depositing every day, every other day, every week, or you're depositing a higher amount, and you know what's coming in and out of your account daily and where your money's going to, who you're paying, credited and debited to, your creditors, your debitors, you know all this stuff. Your vendors, suppliers, you know who you have to pay, where you need to transfer money to. It makes it simpler for you to understand, especially if you have a track record of doing it correctly and not ending up with negative daily bank balances and things like that, non-sufficient funds or negative days. So at times it's helpful for those business owners who are depositing frequently. And even if you're not, this could be your best route. And even if not, this would be as enticing because of what you need to use the funds for and how much you can use, and then come back and get more. So renewals are usually 16 weeks at times, which is 4 months, more so for clients at the 3K plus minimum revenue level. And normally when I see, like, if you're doing 3K to 5K, those can be shorter term. So those can be like 3 to 4, 3 to 5 months. Don't always bet on it being a 5 to 6 month term, just doing $3,000 or $5,000 at a minimum. You want to get closer to 10 to 15,000 and above. And even if you were to get that, then you can work your way up. And over time, getting even beyond 6 months, even getting beyond 10,000 in approvals, 15, 20,000 and above. That's how you work your way up in this market, especially getting a little bit. If you can use that, put it to work, the benefit exceeds the repayment, there's enough of an ROI there, then you can then come back and receive additional funds, which I can help you with the second time or third, however many times around, however many positions or whatever you're going through at that moment, then we can look at things. A personal checking account can be used for business, as I said. You can also have a business checking account. Online banking, it is set up. We are in a digital age, and so it's very common that your bank will have online banking. No FICO credit score check. Normally, that's the case, what you see. So that's a great advantage if you have bad credit, even if you have good credit but low revenue. If you have good credit, you're in the 670, 680 and above, 700 plus range, then we could look at doing a creative credit-based funding with the personal term / installment loan if you need to pay off other debt with that, or if you then later on get a revenue-based loan to pay off your personal loan, or then transfer or balance transfer money into a 0% interest card. That is very helpful. And then you liquidate the cash out of that with like a less than 2 or 3% fee taken out of that with the merchant processor. And we normally don't want to go the cash out advance route for those because you can see 20% or so, and that's a lot of money taken out just to take money out and swipe that. And there's a case to be made where that will be most helpful. California and New York, usually get denied per laws, can't fund there with this service right now. So it won't work for these states. So if you are in California and New York, the best approach, and your revenue isn't above 10,000 or 15,000, I would say, or at least a $15,000 minimum. If you're not within those states, then you still could qualify. Of course, if you're within those states, then we could still look at another service because you're doing the minimum. So it's not like you would go through one of our specific lenders. We would look at it from a specific other case. But because you are not in those states doesn't necessarily mean you won't qualify for funding. We're just going to have to take it through another part of our process to see if that is something you can qualify for. Bank linking with Plaid. It's a very reputable company. A lot of other companies use. Make sure to have your credentials ready. So what ends up happening in this process is you will be asked to supply your credentials, your login information, or however you interpret that. This is a manual, or excuse me, an automated underwriting process, a UW process, short for underwriting. Why is it done this way first? Many people ask me that. It is because of all the manpower it would take to oversee all of these higher risk files that end up going into defaults, that end up going into collections, people complaining, calling the company that they can't make the payments, they need to reduce payment, they need to reduce payments for 2 to 3 days a week, people causing fraudulent activity, wire frauds, financial fraud from so many different angles, people getting into defaults with past judgments in place, altered bank statements, everything. They're trying to hide things. Their name is different here than it is there just to get money. So you have to think about, why would somebody have 5 people looking at these things manually when they know that the return on investment for yourself or them is not worth it? It's not worth for them to put the energy and time to this. And there's many more things, not just that. So just keep that in mind. So you'll be asked for those credentials. It is very safe and secure. I made a video on Plaid. I'll try to link it to you down below, but I've already made video reviews on this, or a review on going over how legitimate and safe and secure this really is, and what a lot of people do use when you're going through more of an automated process, and even when it's manual processed. So that's there. And how I also speak about a thing called decision logic, bank verification, especially at a point when you're getting funding and it's going through final underwriting and there needs to be a deposit into the account. But before there's a deposit in your account, we need to make sure, the lender needs to go in there and make sure, hey, is there enough revenue and sales and deposits for the current month to date or month to day? And if not, it's like, well, last month they had 75,000, and in this month now they're doing 15,000. Oh my, they went way beyond 50%. So a lot of the times when you go over 50%, they'll decline the file, and sometimes they'll still leave it open because you generate enough, and your story, you're like, oh, okay, it adds up, it makes sense, it's dependable, it's fixed, it's not variable that you won't make that money next month. It's more of a fix, like that money's coming into the account and it should be showing up based on your past track record, that money on those bank statements, it looks like you'll put that money in, but still it can make it difficult. So you have to begin somewhere, and you really have to understand all these little things, and there's more to it. And another thing you have to understand is, even like at a higher level, let's say you have other entities, because this is the case. There might be a UCC lien on this, UCC lien 1, and so forth. And that's not like you're saying you have to give up collateral to get funding. No, you're pledging certain assets of the business, even on the personal side. If so, because keep in mind, if you can't make the repayment, how else is the lender going to recoup their costs? Without the money you can't repay back, how can you repay that back is what they're asking. And so there has to be some certainty level from the lender's point of view, because how are they getting their money back that they can go give somebody else too? Now they lost their money. Now they're not in business. Now there's complications on all ends. So it's not an issue if you're asked for that, because if you have multiple entities, normally what ends up happening, especially at a higher tier, and it's per case or per lender basis as well, this could be it. But normally they're required to take those and have those filed or pledged. And that's not saying that you need to get funding, you need to provide collateral for these. It's just to say, hey, if you default, if you get yourself into an issue, we can go after these assets, period. That's okay. There's nothing wrong with that. Go ahead. I've done it multiple times where I personally guarantee and I pledge, which is not collateral back. It's just to say, if we had to put a lien on this, if we had to make sure that this is correct, or if there's a settlement, there's no settlement there. Like, the lender has to ensure that they can collect that. So with multiple entities, they normally end up going after the multiple amount, sometimes one, or sometimes that can be taken off. And normally that's not always the case, and that just don't always expect that. That's okay. Just understand that you have a payment that you need to make. There's nothing wrong with UCC liens, nothing wrong with, it's not a collateral back loan, but if you were to pledge and they ask for business assets here and there for these entities too, or one, usually multiple, there's nothing wrong with that. There's no problem with that at all. So here, let's move forward, and then I'll go to the comments. So very reputable. Some banks haven't teamed up with Plaid and just doesn't work. No banks, about 5% of banks in America don't link with Plaid. It could be 10%. I've seen that number go up now. Maybe declined if your bank doesn't link. So I've seen that to be a case, and people come back to me. And if that's it, it's hard to go through them and get funding, and you won't be able to get the funding normally with them. You'd have to go ask your bank if they have a security issue or a connection that they don't want to connect with them, and just go over that with them. See if they have that where they can toggle the switch on per se. They can turn it on so they can give you access to do the link banking, and you can go ahead and get your funds. And sometimes it just won't work, so we have to look at alternatives. Qualifications. And I say, please read carefully before clicking the link below to get started. And again, it'll be down below in the description, as well as the questionnaire form if you would like to fill that out. And if you have, I'll get back to you in time. I do get quite flooded and busy. And if you have received the response from me, there you go. You should know that, or I'll follow up with you just so you know in case you didn't see it too. So here, as I said earlier, 3,000 plus in monthly revenue / sales and 3,000 plus on your lowest month in the last 90 days. That's normal. The lowest month, and that's normally what we base it off, especially with lower tier files. And if your average is higher than your lowest monthly revenue, but by how much, or it could be vice versa, they're not even close. Normally the lowest month, but if it's too far of a range, it's hard to do. So take that into account. And you can make a case certainly for like credit-based funding on averages and stuff like that that we look at, but we also look at all revolving accounts and your highest credit limits and then per credit bureau. That's a different thing for a credit topic. That's not for this one. 4+ months in business is normally it. I've seen 3+, but 4+ months is normally it. Normally 3 months of bank statements is what would be asked for. Minimal non-sufficient funds and negative days. No more than 5 non-sufficient funds, negative days in any of the last 3 months. That's where you get yourself into an issue. That's where people won't issue you funds because you have too many negative days. You can only have so many in a day, in a month, 20 or so working days, more or less. And if you have exceeded that, and if you have exceeded that in multiple months, how will somebody lend you? And in this month, though, you go, well, it looks clean. I picked this up. Well, you have had that recently. We don't know this month's ending amount yet. Or we do. We're closer to the end of the month, but we can't rely on just this month here in July that I'm making this video on and say, we're just going to rely on the month-to-day revenue, but I really needed the funds. And I know if I take the funds, and I get the reason for what you're going to use the funds and how that can generate you the right revenue. It makes sense, or sometimes it doesn't, but we can't just take your word on a hypothetical projection and assumption and just assume that you'll have the money that are sitting in your account. What if something goes bad? Oh, well, we relied on somebody to make that money, and the lender was so naive that they just wanted to make money off their money. No, it doesn't make sense to do that. Current loan consideration. If you have a current capital advance, the amount you still owe will be taken into consideration and cause a reduction in your approval amount. So keep in mind, if you already have an advance, if you're looking for more additional funding, you're over leveraged. A lot of people come to me with 2, 3, 4, 5. I can't tell you how many times in this market, it is the worst. If you're taking more than 3 advances, I would say if you're just taking 2 advances, 2 to 3+, you're using a lot of that money to pay off existing debt. A lot of the times it's over 50%, over 75%, especially in this market because there are more expenses than it's ever been. The pricing on a lot of things from different industries have risen, and everything happening in our economy, people making less of a profit, having less cash flow, making less per unit. So you have to stretch your dollar as far as you can and even get more funding. And in the previous market, you would have only needed like 10,000. Now you need 20, 30, $40,000 just to get anywhere. And you need to pay off certain expenses that just keep rising. And so less cash flow, less profitability, less free cash flow stuck in other places, and understanding how to restructure those things and generate more cash flow. That's another topic for another time. But if you're over leveraging yourself, ask yourself why. Can you step back and ask yourself why? Have you? How's my business management? What are my business operations really looking like? What will they look like in the next 3, 6, 9, 12+ months? So you really need to sit back and look at your stuff on paper and think about, what do I need to lower? What do I need to cut a little bit of? Okay, my cost of goods sold are here. This is why the raw material is this much. I have 10 different ingredients. My markup costs are going up a little bit. This is more marginal. I need more of a yield from this product, so I'm going to move this back a little bit. And then the next 2 weeks, I'm going to add 2, 3 products that make more from us, and I'm going to actually increase the pricing for that for the next 3 months. Let's just track that very closely, because I've seen it consistently over time in the past that it has worked. If I raise the prices on these, this is a higher product, or I'm going to do an LTV where I give them one product and then you do an upsell, or you do the lifetime value of a client. If it's not then later on you say, hey, we just came out with this new product. Based on your previous past and experience, I think this is something that would be in your best interest. Would you like to take a second to check this out? And so, yeah, if they're more receptive, if there have been people who have been working with you for some time, yeah, of course, a lot of them, and they're rating fans. Like, yeah, I like Gerald, I like Jimmy, I like Sally. Not only her products, but I like who she is. And that's ultimately it right there. And so you just have to figure out, like, what do you give somebody else after this? What happens after that? What happens after that? What's the back end? What's the middle? What's the front end? And these are things that I help people with out. And this is a value ladder. And this is the concept of ascending your client to the highest altitude and helping them in ways that others couldn't be helped and your competition can't help them in, and ways that you stretch that out. And so there are many other ways we can look at this: unique selling proposition and a few other concepts, but I will leave it there for now. We're going to close up here in a second. 4+ deposits is always best per month, but we are willing to look at 3+, sometimes less than that, specifically in certain industries like construction. And if it makes sense, what we don't want is a business who just does one deposit of, okay, you generated 5,000, but what? That was the first 3 days. You had 20,000 coming out of the account, only doing 5,000, and you deposited this in the 2nd of July. No more deposits, no more revenue. Like, okay, you have cash, but where's that cash? Why didn't you deposit anything? Why didn't you put things into a check? Like, where's that money? You tell me you have money, but it's not reflecting on your bank statements. See, this is where you get into issues on, I need money, but hey, are you causing financial fraud? Are you sending in the wrong information? So there's a lot of things. It might not be that. It could be a combination of things. But we are willing to look at things, especially with lower risk or higher risk and lower revenue businesses normally deposit a lot less. How it works, I'm going to quickly run through this. You can get 25 to 75%, or if trucking, 50 to 75%. I've seen 25 to 50% too, depending on the revenue ranges. It could be lower if you have closer to 3,000 to 5,000 a lot of times, and if it's your first time. We don't want to take a chance on somebody that has never received funding and we don't know if they're going to pay it back. No matter how stable the revenue is coming in the deposit, sometimes we have to look at that. Of your first advance, of your lowest monthly revenue in the last 3 months, normally is what we look at. If we had to look at 4+ months, we can do things with like a bank verification. And when we look at that, we're able to see a past history, specifically with decision logic bank verification checks more than anything. We'll also take the average into consideration to try and get you more. For example, if your lowest month it is 3,000 and you're averaging $1,000 with 20,000 in annual gross revenue, let's just put it there, at an average daily bank balance of $1,000, which is good. At 1,000 is what we want. Anything underneath that with these higher risk files, we're willing to look at and consider. But when you start looking at your averages and when you start comparing day to day what that looks like, the activity is what we care. Like when we break it down onto a microscopic, imagine me doing a scientific experiment, which I love. Chemistry. Chemistry is my favorite class. I love being underneath the microscope. I love working with things in the lab. So just imagine me with my coat. And I'm going in there underneath a microscope, looking at it on a cellular chemical level. And I'm breaking the pieces apart. That's what I am doing. And I'm literally looking at the numbers per numbers. And I'm even doing my own calculations. I'm making sure that all of this makes sense and it meets my criteria for the lender, or for whatever lender it is. I have a lender here who's accepting 600+ credit, no more than these non-sufficient funds. This is what they want looked at on the bank statements. And then they tell me to do the rest of that. Okay, I'll look at this. Boom, this is how I mitigate the risk. They're going to look at calculating over 1,500 over this in the next 3 days. That doesn't look good. They should be doing over 3,500 in their industry, or for what they're trying to accomplish, they should at least be at a minimum halfway there at $2,500 at this part of the month, and they're not meeting that. So it can drop the amount. It can critically remove a file. And so it happens so many times and it's so frequent. So here, it's best to have above 1K, but we can still look at it. If not, maybe harder if your revenue is higher and we can meet the 1K, then you can get between 750 to 2,250 more or less to start come back and get more right away if needed. I'm not going to read through all this. We're just going to speed through it, but I'll share this with you more or less too in the questionnaire, and it'll be customized to you. Projecting down in revenue is not a good sign. Have unstable cash flow, bank statement concerns like average daily bank balances, average daily sales is continuously low, starting and ending balances, averages. There are different deposits that I have to look at and different calculations as well with a lot of this stuff. Negative days, credit. With this one, credit's not so much of a requirement, so it's less of a concern. It is with others, though. Note, if you do not get all the funding at once, you can come back and get more, get additional funding. What you shouldn't do is stack. You don't want to get one funding here and start stacking another one on top of it. That is not good. It's not looked upon, especially if you get declined. Let's say if you get declined to any capacity. You normally want to wait between 30 to 45 days. So anything I would say over 30 days, anything over 45 days is generally a good time to reapply, especially if you got to the stage of an offer and you declined an offer, for example. you don't want to go immediately back into this. Oh, I changed my mind, or I had an issue. Like, it's better to make sure you take care of that. Even if you're going through something, you had to put a pause on it. Does it make sense, or can you wait another 30 to 45 days to then come back and get funding? When somebody's on your back, you have a seller, you have a vendor, you have these suppliers. If you don't meet your goals, you're going to have to lose them, and you don't want that. You don't want to have to go through the process again of getting that all together. And so think about the loss you have from not having the funding. That can mean losing your vendors, your suppliers. That can mean losing out on a new seeking business revenue generating stream, new down payment on a piece of equipment. It can just move the ball with certain payroll requirements you need to meet. There's a lot of other things you can attune this to, or put this in part to. And so not having that also affects you in ways on a conscious and subconscious level, your cerebrum. Like, at the end of the day, when you have to go home and look at your family and think, sorry, I just couldn't get the funding. There'll be another time. But when that other time comes, is it too late? Normally it is for most people. And if you can bear to wait, that's fine too. There's no ever pressure from me on my end. I just want you to know the expectations and understanding your business. I know, don't wait 30 days. I'm not pressuring you. I'm not like that. I'm not that person. I'm not like these other people out there, but I wouldn't wait. I'll give you my best advice. And my best advice is never in my best interest. It's in your best interest. So I never say something that, oh, I'm going to try to get the most funding. I want them to take it so I can make money. That's not what this is for. And so just so you know, I don't get anything until you get something. So I don't get a pay. You can use the word commission, although I don't like using that word. It's not what I grew up with. So whether it's used in the right or wrong context, it's just not a word I normally like to use or would use. But I don't get an earning unless you get your funding. So I could be charging you on application fees. I could be charging you on putting the package together, consultation calls if I had the time or energy to do that with people all the time, and if so that. And also on a coaching, consulting, on a course or courses that I have, extra material. Yeah, I could. And what, you never get funding? And so I just made $1,000 or $300, but you never got funding? That's what all these other people, and a lot of them, are doing. I'm not going to start pointing names and saying that, but there are those situations where people will do that. And so I can do that, but I haven't put that in. I have the concept and everything, but I want to do it in a way where I'm most transparent with you and letting you know that I don't earn anything until you earn. And it's part of the origination fee, the broker points there, or it's the broker points separately, processing fee, origination fees, closing costs, and just a few of these things. So it just varies per service as well. And I just want you to know that I don't get to put food on my family's table until you're able to. And hopefully that, in a way, gives you some understanding and perspective. So you can always come back and get more. Your payback amount between 1.29 to 1.69, as I mentioned. I won't go through all this as we went to it earlier, but the amount that you could leverage, let's say, for example, and if you were to go over a certain amount, why would you go over the 1.5? Because you've been trying everywhere and everywhere. Your low balances and a lot of things, it's just you've been declined. It just doesn't work. There's an issue here, and we're willing to take a chance on it, but you have to rebuild yourself up to later on get better terms at better rates and more funding. And even better lenders at a point. If there's higher revenue lenders, or if there's a higher revenue service, we work our way up. And if you are already up there looking down, you're like, I just need a little bit, Michael. I just need a little bit to get me over to complete this project. I'm a real estate property management company, and I just need an additional $5,000 to complete a project. I just need the working capital. The rest of it, I already have this and this together, or I already helped you get that. Okay. And also, I do a lot of the real estate stuff too, just in case you were wondering. I do a lot of things with fix and flips, rental investments, commercial property, and I help out a lot of people get those in terms of the funding side of it. And a majority of that I'm doing a lot of right now, especially on this side. So there's a little bit what it looks like if you were going through certain underwriting qualifications, why you would qualify for that. And until you get to a 15,000 and above, more realistically, 25K and above, you can get between 7 to 11 month terms. Sometimes, normally though, when you see 15K minimum revenue, 4 to 6 months is what you see in a term. And if you get to 20, or not 20, but more so 25K in this market, and it's that some of the requirements for industries have gone higher, you see 7 to 11 month terms. If you want 12 to 24 month terms, then you should be doing have a 675 plus credit profile, closer to 700 plus is best. And you're generating 50,000 plus per month in revenue. You have over a year or 2+ years time in business. And there's a few things that we look at. So everything is different for each person. And this is what is best suited. And I'll find the best lender for you for your specific needs and industry and more. So it's a soft pull. throughout the process. So you don't have to worry about hard pulls there. And there's just a little bit of a breakdown example on 1500 if you got a 1.45 rate, depending on what, with 3 months and what the payment type is, and all the way down to a weekly $180 payment, excuse me, and that becomes a $720 payment, and just a little bit there, and the cost of funds a little bit more, some more examples, and I'll show you some ballpark ranges based on your specific needs, but they are not set in stone, as I said there. And the application to get started there. So I'm going to round up this video. Hopefully you got a lot of great value. And then I'll go to the comments here in a second. But just so you know, there are many other ways to get funding. This is one on just bad credit, or if you have good credit. It doesn't have to necessarily be bad credit related. It could be good credit too, but you have lower revenue. But if you have good credit, let's look at that. What do we have? Well, we can do creative credit-based funding if it makes sense to, and you are qualified to do that. If you have bad credit, or even if you have fair, good credit, you could take perhaps a personal and or business credit card or a few rounds. Or if you don't have optimized credit, the point of it is to have optimized credit, to have lower utilization on all revolving accounts, to make sure you have minimal inquiries. Are certain banks or are certain card issuers credit inquiry sensitive? Are they late payment sensitive? If so, by how much? Normally that's the case, that just the majority of them are. New account sensitive, are they? How many new accounts should you not have? And there's a few more things on the creative credit side that I help out people with: aged accounts, age history, having comparable credits, getting 3 to 5 times the amount from their personal credit limit or limits on each of those bureaus, and whatever bureaus, the banks, the regional banks, top tier, lower tier, community credit unions will pull from, and understanding which one is it: Equifax, Experian, TransUnion. And if I needed to get 3 from Equifax, how can I do that? Could I do credit card stacking with 3 from Experian, 3 from Equifax, 3 from TransUnion, potentially? Or could it be 1 from each, depending on your file? That's what we have to look at. And I know how to look at credit. So whenever somebody presents that to me, I'll know just by doing an analysis, and I won't charge you for that. Myself and or my team, we won't charge you for that. And so that's a great thing to have on the back of your mind, to know, oh, now I know I have to go increase that credit limit. Instead, I have a high credit limit on 2 cards, one from Wells Fargo, one from Chase. I have one for 40,000. I have one there for 30,000. And I'm just saying that as an example if you had that. But 40, 30,000, how much of a relationship have you built with them? What have you done with them in the past? How many inquiries? We look at a lot of things and go, oh, you're over 6, 9, 12 months plus. Okay, what's stopping you from asking for a credit limit increase? Well, I haven't really thought of it. Or if I did, I just didn't want to get a pull from it. Hard pull, soft pull. Well, these pull soft pull, limit increase, these pull hard pull. And if you did use a hard pull, now you wouldn't, oh, okay, because you didn't know. Because if you did that, then you'd think you wouldn't be qualified to get other types of credit. See, there's so many things that come up, and the questionnaire form would be the best place to begin. So please fill that out. There will be a describe your request, describe your financial needs field. Be as thorough with that, please. That's your opportunity, and that's for energy and time efficiency. It stays between you and I. The more you give me, the better. An example: I am seeking funds for expansion for a new property and also a new piece of equipment, as well as marketing. 10% of this will go into marketing. I have another 40% that I need to put into equipment. I need to put 2 things. I have a down payment. I just need to purchase this with cash. And then the other 50% of it, I'm going to use for the rest of what I need for the property, or I'm going to use it for inventory. And then when I get inventory, I'm going to generate an additional $5,500 from that in the next 2 months. My ROI and my margins, I'm looking to increase it from 10 to 15% and a little bit more. And then I can do my own numbers too, to really understand that, especially when I have the documents on hand. So that's a better prepared describe your financial needs request field, and just a little bit of that. So that is everything from me. We've spent more than enough time. I'll go to the comments here in a second, but all of the different ways of getting funding, you're not limited on. I'll leave more content down below to get started with this one on the up to 10K in 10 minutes, more or less. Sometimes it takes longer because of the process of supplying and the credentials and this and that. So just keep that on the back of your mind. And the rest of the information I'm going to leave for you down below in the description. And I have some content on credit lines. If you want to pick up a free video series on getting 0% interest credit lines and getting free documents on where to turn to, potential banks or potential situations, and really understanding where is it best, because you're always trying to figure out this, but other people are charging you. What people are charging you, just keep this in mind. What other people charge you on that? And so whenever you think about what somebody's charging you for, is it 1, legitimate? Is it 2, up to date? Is it 3, necessary really for me to do that. And it is not always in that order, but there are many other things you'll question. So I know the psychology to this because not only is it because I'm an introvert and I think more, it's just because I've been through this and I know when and why or when I shouldn't purchase a course and what's the alternative. If you want to invest in yourself and purchase in something to get a higher education, at times you're having to willing to spend money to do that and you have to invest in yourself. That's what it is. It's an investment in yourself, but you have to understand and be calculated when to do that. Appreciate you. Thank you. You are most welcome. I like the icon, the Hulk, and it precedes your name. Thank you for that comment. And for anybody else, I know this was a spontaneous live, so not many of you could make it, but the replay will be on YouTube, of course, and all the information will be down below in the description. That's my there's my introvert side coming out right there. Nothing wrong with that. So that's what I'm going to leave you with. If you did get value from this video, please give it a thumbs up, share it with others who you feel will find value from it. It can be a complete stranger, a friend, or a family member. And if you have not subscribed, please subscribe and click the bell notification icon so you do not miss any future content. I'll be coming out with plenty of it to come out with. I've already created content that I'll be posting later on. But all of that is there. I'm going to keep you up to date, up to speed on not just loans. And that's not just a business loan broker, but anything creative, credit-based financing, anything on collateral, anything you need to know about on those things to mitigate risks. I'll be there for you. And wouldn't you rather consciously have somebody who just doesn't create content? Like you see a lot of YouTube videos and people just creating content, but you actually want somebody who actually looks at documents and takes the time to care about that. Like when I'm not here, I'm doing that. I took time out of my schedule to do this when I could have been doing 2 or 3 more documents from certain files. So keep that in the back of your mind. And I'm not just showing you how to go out there and put these applications or go through these sequences, but actually on the back end, looking at this stuff, working with the right lender, finding the right one for you, not hurting your credit, not dispersing this information to third parties that are just going to use that against you. I'm not buying information from the credit bureaus because that's what you need to be cautious of too. And I tell clients is if you ever get a phone call or an email or a text from a different provider that's not this or it's not me or this person, please ignore them. They just bought information or they found your information. They're trying to, one, steal you, and then two, whether it's ethical or unethical on what they're trying to provide you with, why would you want to work with somebody like that? That's just nasty. Why would you, if your standards are that low, like, okay. But if you are not that person, and even if you were to be, just have that frame of mind that, hey, I'm getting help here. He's going to find me what's best. And normally that's what I do and beat the majority of offers out there, myself with my team. And if that's something that sits with you and you want the very best and you want to stop looking everywhere and anywhere, down below in the description would be the best place to begin. And I will leave you with that. Thank you for joining me today. And if you're watching this on a replay, thank you. Appreciate you like always. Thank you for sticking with me through these many times. If you've been with me for many years, you would know how thankful I am of you without saying it. I don't always say it, but I just want you to know that. And you know it goes without being said that I'm that person who doesn't talk about it. He does things. And you know that I know. And because I'm a thinker more than anything, more because I'm an analytical person, sometimes I don't say it. I'm thick-skinned and I give people the benefit of the doubt. And I want you to know that I will never pressure you. I will never push you. But I will highlight the benefits. I will highlight why this makes sense and never pressure you to take something, but just help you to remember why you're doing it in the first place. So if so, then this, only to your best benefit, not to mine. So a lot of people always bring up situations that don't make sense. It's just an excuse after an excuse. So if you had your partner to help you who's making the decision, obviously I'm not going to say they're the ultimate decision maker, but if you had your partner here with you right now, what would be the difference? And I'm not trying to say that as in like I'm pushing you. I just want to have an understanding. Like, what is it? I'm not pushing you. I'm just wanting to know. And I don't always ask that. But I just would like to know, like, if they were here right this second, what difference would that make? Would they affect your decision? No, but I just wanted to hear him to hear this or her to hear this. And then hearing this, how do you think they would react? Well, if it was right, then they would react this way, or automatically they're going to say no. Okay, so why would they say no? Because they're the ones that are handling the finances. They're the ones who's actually doing all of that. And so I should be actually sharing this or speaking to the decision maker, right? So all this time, I should have been communicating email, text, or if not, like that should have been presented in a way where maybe you weren't able to correctly or enough of, but it just wasn't like, it was just message wasn't getting across to them. So you have to understand that. And I'm very observant of a lot of these things. So please don't waste my energy and time. I don't deserve that. I'm in a part of my life right now where I love and I care about you and I care about people, helping them. But please don't mistake my kindness for weakness. Don't put me in an uncomfortable situation where I'm not growing. It's just like you have to grow in your own comfort zone, but you don't want to feel like you're being pushed in a way that is like, that's not me. Like I'm going out of my character to do that. That's just not me. I know I'm not going to be on the call with that person, or I'm not going to do it that way because that's just not me. And so I won't become somebody that I'm not to make money in. So you really have to look at your ethics. You really have to understand who you are as a person and understand what you are willing to and not do, and delegate what you don't want to do at times, or completely change things. Because if you become somebody that you're not, that's when you start pleasing others without pleasing yourself, without first yourself and then helping somebody else get what they want. So you have to understand that if you're trying to help someone, you have to become the person who can help that person. Well, if you're not sharing with them everything, like I have brokers, and I'm going to end it here, not to go off on this, but it's important that you know, I've had people that I train, like I'm up here confidently and certainly. I'm not cocky. I didn't grow up that way. And I'm helping a lot of people that are moving their way, or people that are just here that don't move, or here or just get stuck. And a lot of them come back to me and I go, did you find out about this? And like, no. And like, they just started this. And like, did you find out if they had any kind of collateral? If so, what type? And did you go over things or credit? Well, no, I didn't. And I just sent them here because they had the revenue and this. And, okay, they have the revenue. What are their needs of funds? Well, they're going to use it to generate an additional 250,000 from the 100,000 they're making now, and they need to have extra cash flow. Like, did you get that information? Did they share it with you somewhere in form or another? No. So they're going to be cash flowing this amount, but they're going to be losing in terms of operating cash flow over the next 1 to 3 months, an additional 50,000 off the 250,000 that they could be making in 3 to 6 months. So think about that. What could that additional money be used for? And what happens after the 3 to 6 month period when they make enough money? They're going to stagnate because of the season. And so you have to also think about, like, where are they putting all of their funds into? If they have to put only a little bit here and there to get enough out of it to then prepare themselves later on, like, you have to think about those things too. But so many people don't. They just want to rush things with you. And I would question that very severely. So that's everything from me. Appreciate you all. Thank you for tuning in. All information in the description down below. Take care. Bye.